Guys, we'll just start just now. Morning, Mr. Meneer Schippers. Now, I've noticed, by the way, Chris, you got one E in your surname. Is that on purpose, or is it actually got two in, some misspelling? Because I normally see the name with two E's, just out of interest. SCHEEPRS, just out of interest.
No, I'm unique, Roger.
I get it.
Yeah.
I like it.
My granddad was one of the used to run all the hospitals in Transvaal years ago before he passed away. So I think he did that on purpose.
Oh, right. Okay, I get you. I like it. Yeah. It's to say many moons ago, many years ago, the lady had SIOUX, SIE, something like that. Does that pronounce your name? You said, well, you've heard the Indian Sioux tribe, SIOUX, yeah. Why'd you say it? Susie? Oh, I see what you mean. Just shows how our construct of our brain is. We can take it in context, but it's out of context, we get confused. Yeah, okay, excellent, gotcha.
Absolutely.
Sound like you come from good stock there, from what you're saying your father, grandfather did. It's pretty good.
Yeah, I think he stole all the brains in the family.
Yeah.
Yeah. Very clever man. Studied until the day he died. So
really?
Yes. Every single day of his life. No smoking, no drinking. So yeah.
Yeah. Because that just stuffs the brain up, absolutely. I like my beer, so I know. You,
likewise.
Yeah, good for you. Let's go down thick together with a beer, or intelligent without a beer. No, I'll stick to being thick. Anyway, good guys, that's 9:30. Okay, how's it, Marcus? Good to have you back. Bit of a light turnout today, only half a dozen or so people, but anyway, hope a couple of people add to it later on. Okay, I just want to start off with the USD CHF. So pity there's not more people who join the trading because they can understand more the concept behind the signals and the trading, etc. Just going to wait on a second because Nikki's joining and she's fairly new to it. Just want to maybe explain again later on or tomorrow because how's it, Nikki? Good to have you. I'm just going to go back and start again with the USD CHF trade. I've got it on the screen there. I had a client complain about the signal because it didn't work out for him too well. Now, the problem is, and I say too many times, but I obviously have to keep reiterating it, you've got to have knowledge, you've got to have the equipment, and you've got to have some capital. Now, just let Mark in here. Now, what happens, again, like most, he's got an enormous, very small amount of capital, and he went for this trade, and he hasn't been, I don't think many classes actually, but anyway, I haven't obviously been to TR because I didn't know the oak. And I usually remember the names and I see them again, you know. Based on a small account, he didn't understand position size, he overexposed, and when the fundamental came in at 2:30, it was the GDP, gross domestic product of the United States, and at 2:30 also the weekly jobless claims. And it could have gone either way. We don't know till the data release. And the US dollar Swiss franc yesterday was doing pretty well. It's down here nicely in profit. Clearly, it jumped on that because it happened to reflecting that specific way to strengthen the dollar. Okay, now it didn't hit the stop loss, but he was margin calling. So he said, hang on, these signals are no good. Well, a couple of things. First of all, the margin call, free margin going on the back, you've got to have that. You've got to make, if you're limited capital, sometimes you can't trade because the risk is too high as a percentage of capital, number one. And number two, you've got to be aware, even if you've got a highly leveraged account, which means your marginal deposit is very small. If you go in big to take advantage of that, it doesn't take much movement either way to hit a margin call. Okay, try to explain that. I'm not sure we actually fully understood it anyway. But that has to be understood. The next thing is, it didn't hit the stop loss. We're still in this trade. And before that, because guys who come to the trade room modify the stop, I did just in case before 2:30, and I got stopped out of the Swiss franc, the Swisses they call it, only the dollar Swiss franc they call the Swissy, by the way. I got stopped out of the Swissy. I didn't make much, but it was a bit of blue there. Okay, it popped up, and then I saw it's a bit short-lived, this strength in the dollar, and I was getting a better price. It's coming down again. So I decided to go in again. I think I'm slightly breaking even. It's okay. But the point is the trade is still there and it might work out. So I just want to reiterate this. You need to give an understanding, as I said before, millions and millions of people are trading with different values, different cultures, different amounts of money, different strategies, different. And you're always going to get the noise. You're not going to get in and pick a bottom. Let's say, you get a signal, that's the bottom, going up, and that's the TP, there it goes. If it was as simple as that, would be all, well, there wouldn't be any poverty, leave it at that. It's not as simple as that because you take into account, and the very, very enormous amount, I forgot to leave that out, very important, is the emotions when real money is as a trader can sometimes have funny effects on the price as well. So you've got to go with a strategy, a view. You're going with the stop loss there, the TP, I don't know, there for argument's sake, and stick with your strategy. If you get stopped out, don't move your stop away. That's part of trading, and you can handle it because you got the volumes right, because you're only risking a certain percentage of your balance. If it comes in your right fashion, no problem, like I did yesterday, and hopefully you guys do as well, modify the stop to reduce risk. So let's say your risk is, I'm making 500 Rand, just an example. You've got enough money, you've worked it out, that you can handle mentally, and your account can handle a 500 Rand risk per trade. So the worst situation before you click the button to say I'm in, buy or sell, is 500 Rand, mentally speaking. Can I handle it? If you can, you do it. If you get stopped out, well, you knew that anyway. Didn't know anyway, but you could accept it because that's the worst scenario. But if it goes in your fashion, you bring the stop loss down. It doesn't have to be entry. You can reduce it. Don't get it too close, like I say again and again. But you can say, yeah, maybe I'll bring it down a little bit. See if we get in the right fashion. Now my risk is 300 Rand, which is not good, but it's certainly a lot better than 500. This is so important. People have just not getting it. And it's not basically rocket science. Then you get a break even. Now, nobody wants to get out of a trade break even, but I'd rather do that than get out in a loss. So their mind now is okay. They're going to go to bed tonight. At least you can't lose on that trade. Then it goes down further. Now you modify it, keeping a distance again and again between, for the noise, the up and down by guys getting in and out, in a profit. So if the worst scenario, you make, let's say, 100 units, and if it still continues, it might be 200-300, but your worst scenario, you're always looking after the downside. That is how you look after the upside. And I hope that's all clear going forward. Now, the next question is, well, I don't have time. I've got other stuff to do. Yes, I get that. That's fair enough. I get that. But you still can have it on your phone, check it occasionally. Don't have to stare at it. Look, I'm not staring at mine at the moment. I've been stopped out quite a few yesterday, in profit, I might add. But remember, A1 DD stopped out. It's not always negative, as you mentioned yesterday. So there's a couple of reds left in there, but that's okay. But I'm not staring at it. Okay, occasionally you check it. Oh, hang on, it's doing quite well. I'll adjust stop loss accordingly. That will save you a lot of grief going forward. Okay, I hope that sort of makes sense. Zirconium. Okay, so it's very important. That's why I have the calculator. That's why you budget when you go shopping, etc., etc. It is so important. Okay, and try, I know you never get rid of the emotions, so try and understand them more. The more you understand, the more knowledge you have, the more you can control those emotions. Fear comes from lack of knowledge. The fear reduces at the same speed as the knowledge increases, not quite, but more or less. Okay. That's why when you start summing off anything, doesn't matter what it is, you're terrified because your fear zone is through the roof because your knowledge zone is at the floor. But as your knowledge goes up, correspondingly, your fear comes down. Hope that's all understood. Well, Mark, you will do because you understand it. You've got the concept. You can't master it if you don't get the concept. Now, you may never master it, but at least you got the concept and you accept it. It's when you don't know anything, understand that, or don't get that concept, is when you're going to continue floundering. I mean, yeah, we're all going to do that. I mean, I get emotional, we're all emotional. It's where we are. It gives us love, it gives us fun, it gives us highs. Obviously gives us lows as well, but you don't do away with it, but just understand it. And then, and then control it to your own specific personality trait. Yeah. That's why I've gone about the demo, because I've been there. You know, you think it's a false paradise. You think you're learning. You're not, because you take the emotion out of trading, forget it. You have to have it there. So I use the golf scenario. I'll do it again. You get a fun day out with a couple of mates, or you're at a driving range and you got a 6 or a 5 or even a 4-foot putt. You'll make it most of the time. Someone taps you on the shoulder and says, if you make that putt, I'll give you 10,000 rand. However, if you mess it up, you give me 10,000 rand. You suddenly find the shaking comes in, the nerves come in, and the likelihood the guy who made the bet is going to win because you haven't got the mental strength to overcome that fear zone, and you'll screw up that short putt. And that's what makes these top sportsmen, which I admire so much, so great, because their mental strength to overcome that. It's your first major, and you're walking down, and there's only one shot in it, and you're a good, well, obviously you're a great golf player, but the guy one shot behind is a champion. He's #1 in the world. Your fear zone is absolute. That's why you control those emotions. And a lot of guys behind will come up on that. Jack Nicklaus, if you follow golf, you have heard of him. He said, I didn't win 18 majors. I probably won 4 or 5 of them. It's the other guys who lost the 40 and they gave it to me because they couldn't handle that mental pressure. This is a far smaller area here in trading, clearly, but it's understanding that concept. And that's why we're risk averse, but we're profit pushing. That's why we want to put so little in and get so much out. Unfortunately, I have to say, what you give, you got to get. Okay. That's correct, Corey. Going back on the subject of the actual trading side. Yeah, he says it's likely. He's not going to give that statement now. He'll give that statement next FOMC interest rate decision meeting. So everyone around using what he says puts in a percentage likely. Okay, so the percentage likely was another 0.25%, but we don't know that till it actually occurs. A good example was the pound. It was a high percentage, not 100, far from, in fact. It was a high percentage expected 0.25% increase in the UK by Governor Bailey. As it turned out, it became a 0.5%. You get the general idea. So with the fundamentals going out now, it's always going to be like that, because remember that in the past, not everyone had a smartphone because it didn't exist, basically. So they weren't as mentally pushed around, or the price action wasn't pushed around by fundamentals. It's a different ballgame trading now, because there's more people on the planet now with a cell phone than the entire human population at the turn of the last century. That means the 1900s, around about the First World War. There's probably around about just over 1,000 million people. About 2 billion people have smartphones, because the price has now come down dramatically. But what the damn thing can do, you know about this market, is through the roof. I mean, if Mark came out with what we pay maybe 4 or 5 grand cell phone now, 30, 40 years ago, people would be offering R1 million for it because it can do so much. We take it for granted now. The problem with it, we can all have access to it, but we get access to the emotional, subjective narrative from that specific information, and we react sometimes under and sometimes overreact to that information coming out. So bear that in mind, Coney and guys. You're always going to have this fundamental thing that's going to stop us around, like yesterday when the weekly jobless GDP came out us too. That's why you need the economic calendar. You need to be aware of it and adjust accordingly. In the past, it's just basic technicals. And once you master that, it was actually quite easy, to be honest. Remember, always got buyers and sellers. The guys are master. It's not that difficult. Just to take it off the guys didn't bother mastering it. Now it's become the price action through that emotional fundamentals, etc. An enormous amount of retail people man the street coming on board, whose strategy is more emotional than rational, and does give some rather strange movement of price action. So that's why you've got to really be careful your position sizing and understand that factor, because rationally you're quite right. That is stronger than the other one. So the other one should go down, the stronger one should go up. Why has the opposite occurred or some information come out? Is because a large amount of people collectively have reacted in that specific way, which went against that rationality. I hope that's not too long a rant, but it's really, really part of understanding the trading going forward. That's why I concentrate what we can do something about, we can control, and not lose out because of something we can control. So all we're going to worry about is the emotional reaction to price action. That makes life a lot easier. Okay. Spice ends are tinkling over time. I'm keeping my chickens. I most probably will be observing well from the opportunities. Yeah, so you got as well. You got to learn the trading jargon like LII, leave it alone. Cut means you're chickening out. Rambo means you're an aggressive trader. Yeah, these are important. In fact, what I'm trying to get across as well is Einstein once said, if you can't simplify the explanation to the person who doesn't fully know it or just starting, they don't really know the information yourself. Okay, so that's what I try and use to get across bullet points, not blind by science, showing how clever you are and how many exams you passed or whatever. You might get a pat on the shoulder, but the person on the receiving end doesn't know what the hell you're talking, learning nothing. That's why I try and get bullet points across, like position size, economic calendar, DXY, simplify the charts, understand that the buyers and sellers are coming in, and understand the emotions involved. The emotions involved is a discipline you have the rest of your life got to work on. I'm telling you right now. But the rest can be absorbed fairly quickly. And I've seen that with some people in the trading room. It's amazing what they know and what they can do, and how and the questions are actually come across after a fairly short period of time. They took the trouble to pick those basics up. Other people don't do that, and they trade forever, and they keep kicking the door, and the door won't open. They haven't tried maybe trying to unlock it or try getting a bigger I don't know, what do you call those things? A block of wood to kick it in or whatever. But that's the point behind it. And these concepts, once understood, you got something to work on. You know the direction you're going in. Okay, it is vital. Okay, hi Anna. Okay, now I'm saying it's just go short into this one again. It's jumping around. It's a bit. Not sure where it's going, but we're not stopped out. Round about the round figure of 0.9. It's a more powerful figure than 0.8, I remember. Pure psychological again. It seems to be round about holding the sellers are coming against. This trade might come right. I'm not sure the dollar strength is going to continue. So I think fundamentally, this is going to hopefully come to the party. And there's quite a bit of strong resistance in that area. And I'm not sure it's going to push it up to the SL. So hopefully we'll come around and come right, and we'll take it from there. Now, the Brent, as I mentioned, Mark, when you WhatsApp me, it's very erratic. And they said, well, what isn't? Well, this is more erratic than some. Okay, it's even more erratic. There's a lot of areas which are pushing the price up, which is the reduction coming towards later in July, towards the end of July from the Saudis. And some of OPEC might follow the rule. We'll see what they do, which will create a demand. But then again, the demand is being reduced to, again, there's a lot of problems out there, worldwide economics, been mentioned, discussed many times. So you've got a pushing coming down there, and you've got a pushing going up there. Hence, it's erratic in a fairly tight range. Now, I did modify the stop. I normally keep it about $2 away from market price. But because it's erratic movement, a tighter range, so a tighter stop and a tighter TP with the trade, a signal that came out, that's why I mentioned get a little bit closer, which I did. Instead of $2, you got to tweak your strategy depending on the situation. I tweaked it to $1, and I got stopped out. Now I made a nice profit. I'll be honest, I made a nice profit. But if I hadn't tweaked it, I would still be in with a more handsome profit. But then, as in hindsight, What happened if I hadn't tweaked it and it did come further down, and instead of making 10, I only made 5, and I'd been annoyed. So I decided before I had hindsight to do just that. Now, Mark, are you still in this? If I don't, you told me, I forgot what entry you're in, but you should have been better than 72.73 because the trade came out at 72.20, which is $2.50 away from the price. Well, there you are then, it's $2.50 away. I personally, these erratic movements, it's up to you, it's your decision. You can put it maybe 73.50, maybe even slightly higher, maybe 73.75, something like that. Now, you're risking getting stopped out and it goes to the target. I get that. That's your decision. Or you can leave it at entry and it comes back and you make nothing. You see what I mean? It's a decision the trader's got to make for themselves. I can give you that information and then it's your decision. So I can suggest I would do what I did yesterday, $1 behind, but then you might think it's a bit too close. But I'm just throwing it out to you and then you can make a decision accordingly. Yeah. That's fine. Okay. Because it is irritating to get stopped and you made 20 rand when if it had a wider stop and it goes on, you could have made 50. I get that. But it's even more annoying when you'd either break even or even haven't modified at all and you take a 20 rand loss instead of a 20 rand profit. That is also very irritating. What, on the daily? The red spike depends what whether you're on the daily or 4 hour. Below the yesterday, this one is about. Yeah, I see what you're talking about. Okay, makes sense. And these are quite useful as well. I've worked on all charts, these moving averages, maybe even there. But yeah, but even that's not going to work actually, because it can pop its head down. And in hindsight, this is held, but it would have stopped you out there. So if it was down there, you probably got to move it. But yeah, that sounds good. Yeah. Okay. Okay, hope you're good with that. That's the way I see it. It's not 100%, nothing is. I'm not a $10 trillion a year, 16 PhD analyst, but I do what I can, and quite frankly, a lot of it is experience, which works quite well. Okay, good stuff. All right. Just want to go into that, some of the history. Doesn't make sense there. Anyway, I did pretty well on the history. About the last 10, 11 trades, because I modified, etc. I'll be honest, 1 or 2 hits EP, a lot of them didn't, are blue rather than not blue. Okay, so yeah, just bear that in mind. Okay. Some of the red now, simply because some of the blues have been stopped out, so that's fine. Okay, just want to say it can be done. Right. Yeah, we discussed, but let's go through a couple of trades we've got out at the moment. We mentioned the Swissy. Let's go back. Some of the older ones, I think most guys are out in a profit. That's good. The ones you're out, stopped out in the loss, that happens. We all know that, but it's been made up if you adjusted accordingly, took the time to understand the signals. Overall, they seem to be okay. It's when you misread them or you're margin, etc., that you're not. It's not me defending my position on them. Some of it is, I'm only human. Most thing is to get to understand the concept. And then you'll find some of the losing trades turn out to be winners. You get the point. Okay. Very, very important. People who run a business like Mark and Company should have a slide of this because they know what it's like to run a business. This is a business. Okay. Like anything else. Okay. Right, CAD JPY, highly risky one. Most guys are out of it now, but it came out quite nicely over the last couple of days to this level here. You're not going to pick bottoms, but I think most guys are out but below 109, taking their profit. Leave it alone for now. Again, I think it's probably some downside. What I mean by that, look at this one, was mentioned, I think 3 or 4 days ago. Was it last week? Can't remember. I think this again is overbought. I think the Japanese is oversold. Even talk, remember, there might be some Japanese government intervention. They've done it before, they might do it again. Because they don't want it 2 week, they want it weekish, but not 2 weeks to strengthen a little bit, because they've got it paying a fortune for oil measured in dollars. And it seems to be backing the break up. So I'm seeing a pullback, but doesn't mean to say we're going to go sitting on a Friday. leave it alone, keep an eye on it. Even though I've mentioned before, as you can see, hey, Chris, we talked about it, it's way, way, way in the momentum upside, but it gets to the stage it's overvalued. I think that's been reaching it, but we're not going to confirm there to go in. This was highly, highly, highly risky, but I prefer the Swissy to the to this Canadian, so we'll do that one, and it worked out all right. But the guys were aware of the high risk involved, and the ones who took it could afford it and did okay. Leave it alone for now. If it takes this guy out, we might have a confirmed proper trade to send out to everyone. Okay, so we're getting on that one. Okay, what else we got down here? Euro CHF, 97.87 was a trade. Did okay. I think it'll send out again, actually, because we hit the stop loss about the second time being that trade, did okay. So we got in it around about these levels here, I can't remember, and hit the TP, I think, not stop loss, sorry. That's a Freudian slip, guys. Hit the TP. It seems to be at the moment having a battle to get through the 50-day moving average. These spikes stuffed the system up there, but it was all right for going short. I'm a little bit nervous to range trade a buy against the Swiss franc. If this is the GBP, I would say let's look at a range trade back up here. But I'm a little bit nervous of that guy, so I'm rather more sell if it comes up here or if it breaks, and a confirmed break. We don't want to spike down and shoot back up again. But if this can break here or up there again, I'm selling it. I'm a bit nervous to buy it on that range trade area. But this is a possibility as well. If anybody's in that trade, which was 3 days ago, okay, where we're now Friday, Tuesday, they're in a bit of a profit. It is a bit slow, but hang on, 3 days, they might be out. That's it. What's it, 3 days? It's just Friday, 26th. What's that date there? What day we got in there? 28th, beg your pardon, can't remember right yet. 28th. So we got in 28th, and it eventually did come down these sort of levels here, which some guys, they modified their stock, they might have been kicked out for profit. I don't know. But anyway, if you're still in the trade, it's still a bit early to modify, but you should be in a little bit of a profit, about 20 pips, something like that. Okay, GBP CAD worked out beautifully. The company didn't send it out. Usually best known to themselves, that's their choice. But we and the trader room did it, and including myself, and that was a nice one. Okay, so bottom line, we're out of that while they hit the TP. Leave it alone for the time being. But if it right, hang on a minute, leave it alone, said I glibly. 68.20 we got it in. Is a bit of resistance there. I think we'll wait to see them get back up here again. If we can get up there or better, we'll look at that probably Monday. I don't get much today on that one. Maybe Monday or even Tuesday, I don't know. Depends on the price action. Is it possible we can do that one again and then maybe send it out to everybody else to do okay out of it? Are we all good? Hope I'm not waffling on too much. If you want to put a trade idea up or you want a question or ask something, please remind me. Then I will immediately stop and go in that direction, because it's tough to people trading without getting these concepts. Okay, now I want to mention something. Oh, thank you, Chris. You're a star, and I like your father, and he's a genius as well. So geniuses waffle, so that's okay. Okay, I just wanted to mention something came in that, if you don't mind, I won't mention the name, you can if you like. The person's on here knows what I'm talking about. I had a quick little WhatsApp today. Very, very important client, a lady, okay, owns her own business. Now, she got a little bit frustrated. Discuss this now on here for everybody. I think with the gold and the spread. Now, the spread is not made by me. It's made by the owner of the brokerage. Everyone has different spreads depending on the owner of the brokerage. Some have wider, tighter, or whatever. We've gone in and spent some time compared to other South African brokers, our comparisons. Some are slightly wider, some are slightly tighter, depending. Okay, but the spread is, anybody, you don't go in without trying to obviously make a profit. And the spread is the market maker's commission or profit or whatever you like to call it. Now, how can we therefore make these spreads tighter to make it more attractive to the trader? The simple problem in South Africa is the book values are low compared to Europe and basically America. Okay. In other words, if you've got people all got about we'll use rands, never mind dollars, use rands, 50,000, 100,000 rand, 200,000, a million rand, 10 million rand, 5 million rand, a large proportion, very few, if any, have less than about 10, 20,000 rand. And we got several thousand clients trading. Well, clearly, sheer volumes of scale means you can reduce those spreads. The problem here is we're dealing with people with balances, I'm going to be quite horribly honest with you, are absolutely minuscule. When you've got that amount of traders, which with balances the size of a meal out for two of them, maybe a bottle of wine, and sometimes even less. To make them profitable, you've got to have a wider spread. Otherwise, there'd be no purpose. You see my point? You're not going to drive to Bloemfontein from Joburg to pick up a 20 rand package. It's not worth it. So to make it worth it, you've got to say there's a minimum of 3,000 or 4,000 rand to cover your costs and make a profit. That's why. So we'll go back to the commission scenario. If you don't say you like the spread, you go to the commission, well, you probably come back to square one. The company ain't gonna do it for nothing. You're not gonna go to business for nothing. So you're gonna pay it on commissions. The thing is, the commissions is nice, but you don't know when you got out of a trade whether you made a profit or not, because you've got to understand the commission will come off. Okay, Mark, not a problem, understand that. Okay, cheers. So what do I mean by it? If you don't understand this, please understand this. You go into a specific trade and we'll use rand, okay? And you make, let's say, 10 rand, you see it, 10 rand, I'm using a tiny amount, okay? And you decide to close it, because it's been up and down, up and down, up and down, you're getting a little bit cutful of it, okay? So you close the trade and wonder why your balance has gone down by 5 rand instead of up by 10 rand, because you haven't understood the commission in and there's a commission out. I can't remember what the percentage is, not very much, but it's there. So the bottom line is the commissions were 15 and you made 10 rand profit. It's like I'm in the shirt business and I sell you a shirt for 100 rand. I haven't made 100 rand profit, I made a 50 rand loss because I had to pay 150 rand to my supplier. Just got to bear that in mind. So whether you do it on the spread of commission, there's a cost involved. What the height of that commission or the spread is simply because of the economy of scale. Okay, I hope that makes sense. If the guys start putting in millions, hundreds of thousands, large amounts, then we can talk. But if you're going to continue putting basically such small amounts, then unfortunately it's like anything else. Okay, you go into a bank and you want to deposit 200 rand, you've got to wait all day in the queue and you'll have the highest costs. John Smith goes in with 20 million rand, he ain't going to wait in the queue, he goes straight to the manager. Believe me, he'll probably have virtually a cost-free there. And even better interest rates, because they can lend that money out at a higher interest rate, and that is a valuable client. You get the general idea. We all say we're all equal. That's some of the politics come out. Unfortunately, it's not that way. You know, if a guy's got 100,000 rand, that person's a hell of a lot more valuable to me than a guy who's got 1,000 rand. It's just the way it is. And I don't know how polite people will be, but that, I mean, don't be that naive. You've got to grow up in this world and realize I'm going to go and buy one laptop, which even the IT bit just left Mark, once every 3 years, or I'm going to order 100 laptops a month for him. Which client do you think he's going to give more time to? It should be blindingly obvious, but some people don't seem to get that concept. But I hope you all understand that the spreads are the way they are because we can't go into loss, but we don't want to screw you guys because we've got to be competitive, supply and demand. Hope that's all understood. The other thing I want to mention, if you've got my contact number, unless you don't particularly like me, not everyone does, and not everyone hates and no one likes, that's just the way of the world. If anything to do with trading matters, then get a live chat or ask your account manager. No, you've got to, I'm sorry, you come to me. If you don't like me, well, sorry about that. But they are not licensed to advise on trading matters. You have to be licensed, phase or go for it again. It's a financial advisory intermediary services. I sell you a product or I say, try our broker out or whatever, or how do I open an account or how do I close an account? Fair enough, the intermediary can help you. But if you say to them, why can't we reduce the spread or why can't we get out of the pound dollar or should I get into the pound dollar or that sort of thing, they can't answer that. They're not allowed to. You have to have be regulated in this country anyway, and overseas, certainly not in maybe Ghana, but you definitely in the States, they're far more regulated than we are. We're pretty well regulated. You have to, unfortunately, for trading, come to me. So if you go to the live chat, you can do, it'll pass it to me. So make sure live feeds become direct. Okay, so just bear that in mind. If you have a trading situation, you go around the circle, still have to come back to me, and I'll still call you. If it makes life a lot, you just come straight. I'll do my best. I might be loud, I might be a bit abrasive, but I'm trying to be honest with you. Okay, I hope that's more clear. Any questions on that? Because it is important. Yeah. Okay, and it's part of the service, don't forget. That's okay. So, yeah. Especially you've got a decent size account. Yeah, that's what I'm here for. I don't know what your problem is. I don't call, the doctor didn't call me today, see I'm okay. But the doctor's there to call him or her if I've got a problem. You know what I'm saying? So please use that. It's a function there, make use of it. I don't know everything, but I feel I know a little bit more than people just starting out the trading life. I hope so anyway, and it might be of some help to you. Are we all good with that? Any questions on that? Does that make sense? Yeah. No replies. Well, hope you sort of got it, because as I say, make life a lot easier and get these sort of concepts. Yeah. And I do care, as you can probably gather. Yeah. Okay. Right. Yeah, gold's jumped up a little bit, came off. It's been kicked around by some fundamentals. We didn't get stopped out. It came pretty close, but it was still in it. I still let it run. The 1900 seems to hold. I'm just going to check the dollar now. I think you've all got it. I'll put it on anyway, because people may be a bit shy to say that I haven't got it. So I'll put the dollar index on for you. Just give me a second. Paste. And I'll put the economic calendar. Don't forget, 11 o'clock today, CPI for the Eurozone. Put that on here as well. If any of the fundamentals come up, just 2 and 3 stars, don't know what it means. Well, not a problem. All you do then is you click on that fundamental and you'll get some sort of explanation. Not clear as the world's ever seen. I'll give you granted on that. I'm in the business of something that's a little bit sort of jargonish, if you like. When you're beginning, you know what the hell are they on about, you know? But it does give you some sort of explanation. So there we are. You've got the economic calendar and you've got the the dollar index. Okay, hope that's all good. So I still think stick with the trade. It might come right. How long, I don't know. But the dollar index at this stage of the game seems to be holding around about the 103 to 103.50 mark. Unless the fundamental kicks its backside, which could happen. I think it's today, actually. We're getting a GDP out today. Just give me a second to check again. No, I beg your pardon. It's the CPI on the euro coming 11, and 2:30 is the personal consumption expenditure, PCE, coming out. And that gives some idea of inflation. So that might, at 2:30, have an effect on the dollar either way. Obviously, if it weakens the dollar, this will go up, straight will come off. So let's just hope it helps our cause. But that'll be what's going to happen with the dollar. I'm looking to buy stock at 182.941. You mean the pound yen on that one? And the price you put out there. And a guess, that's right about there. I'm very worried at this stage of the game. The pound at the UK is not in a good economic state at the moment. I'm nervous of the pound. I can see the momentum clearly. It's upwards, but as mentioned, it's not breaking above the last several days. And I'm worried about Japanese. It might not happen. Japanese intervention might strengthen the yen a bit weak. And it's not breaking above. And other people clearly think that way. Otherwise, you'd have a more movement like this in the price action. The fact it's not happening shows that the other buyers and sellers out there are a bit nervous. That's the beauty of the candle. It's telling you that. It's screeching at you. Millions of traders are nervous. That's why we're not going anywhere. We're in a traffic jam. You get the idea, guys. So I wouldn't put a buy stop or anything. I'd leave that alone at the moment. I think like the CHF JPY and the CAD JPY, and this one could start pulling back a bit. Okay, so be a little bit careful on that, Marcus. My opinion, anyway. Okay, are you happy with that, Marcus, or do you want anything more on it, or what do you reckon? Okay, well, let's hope it pans out for you, okay? As long as you understand. Trust is great, you've got to understand what I'm on about. Good stuff, great. The NAS is giving us a bit of jip, but we got a wide stop. That's the beauty of the NAS, and that's the beauty. Those limited accounts can do the micro, you can do very wide stops, because without having too hectic a risk. And it's hovering between the 15 and the 14, well, last 2-3 days, about just over 14.8. It's promising and not fulfilling. I've been stuck in this thing. It was last night, it was going to a nice profit. Here we go. Now it's popped back up again. So I'm just sticking with it. I'm knocking up a bit of swap fees, but that's peanuts. I'll stick with that. I'm happy with that. I'm happy with it. I accept that. Stick with that. Okay. You got your stop protecting if it gets served more. And it might get a bit of movement at the PCE at 2:30 in the US. Remember, that will affect the dollar, it'll affect gold, it'll affect oil, and it'll affect the indices and shares. Okay. Anything else I've missed? I think I've covered all the trades. NZD, USD. I think I'm out of that. Am I still in there? No, I'm out of that. Okay, that hit my stop loss. I made a nice profit out of it. It didn't hit the TP, but it stopped me out in a nice profit. And I think when it jumped on the dollar up +2 yesterday, that's what happened. But I made a nice profit. So I protected myself because in a fantastic profit, I kept an eye on the economic calendar and I adjusted those stops accordingly, just in case. I want to stay on board in case it worked in my favor. Then I'd be really smiling. But it turned out it didn't. It jumped and I stopped out 2 or 3 on the dollar, and that was one of them. But anyway, it was a successful trade. I don't know if I'm still in it, but it was pretty good. I'm thinking maybe people are all out of it. Maybe we can go in again, but I'm not sure I'll do it today. Maybe look at it Monday or after 2:30. But I'm seeing a short coming up on this one. If you're in it, you don't double up. People do. I keep saying that, but people still do. But I still think that is going to be some more downside. If you're out, a chance to go in again for another short. It's gone back up. It seems to be backing to get past this resistance area or support if you're going short. And it's tried a couple of times and failed. The only thing worrying me is the 2:30 data release in the US. It might not work in your favor, but keep an eye on that as a possibility. And another one, if you want to look at as a possibility, is AUD, USD, same principle. Short it, but wait for the release. Okay. Another one I looked at, but as the NZD CAD, if you're interested to check on that one, guys. This is another one. You can see chart-wise, same principle. Don't think you have to find it too difficult to see that clearly is short zone, gone up, tackled it. We look at the wicks on the candles, and it's telling you immediately. It's screaming at you. I'm not seeing much upside here. As it goes up, the sellers are coming in, if you get my point. So there's a possibility there. So what's the hassle? My only hassle there, it's not dollar, remember, not US dollar. The only hassle is this. This is only 50 pips away. Make it 45 with spread. 45 ain't going to cut it. So you've got to go to the weekly and look at that for a TP, somewhere around about there. How far away is that? Or you may be even lower. Now, if you're going to do that, you're looking down to back in on the weekly. Oh yeah, last year I was going to say. You're looking at 11th of June last year. That's a year ago. I'm not comfortable with selling it without a TP of a more recent level to attack or target. Are we on the same page? You know what I'm talking about? To try and target that so I can make the trade with a stop loss. My target is unrealistic, so I'm risking too much for the potential profit. To get my point, and that's too close. But this is a possibility. If we get another bounce somewhere up this level here, short it down, then you've got a TP and a risk level for making a pretty good trade. Are we all where I'm going with this? Does it all make sense, the concept? Because this is the valuable stuff, which is, in my opinion, maybe I do every day, I don't know. It's not that complicated. You don't have to put millions of fancy bloody indicators with fancy algorithms. You just have a look at it saying, yeah, is it worth going for? Another one on that subject, before you jump into something, look at the range over the last couple of weeks. Is it going anywhere? Do you want to tie your capital up for the next 2 weeks to make 10 to 20 pips? So the channel will tell you that. I hope that's been fairly instructive. I hope you've been following me. Jot notes or whatever, because this will make your trading life a lot easier, a lot quicker to grasp the point. A lot easier. Took me a long time to work this lot out, so you're getting it sort of where you can grasp it maybe 2 or 3 weeks a month. Most people take years because they have to fathom out themselves before they follow it. But I have talked a hell of a lot, but I hope it's been of value. And it's, you know, it's a forum. It'd be nice you engaged or asked about it, and you clarify 1 or 2 things on that, because it'll make your life financially a lot better and easier. Any comments on that? Anna, Martin, Boani, Brian, Christian, Chris, Edward, quite a few guys in here. Any questions on that? If you don't agree, you're not sure, or whatever, please be hearing. You might have a very valid opinion that we can all learn from. Are you good there, Mike? I think you know most of this stuff anyway, but it's good to hear anyway. Are you good there, Nikki? You're good, fine. Anything else you want? You've got, oh, by the way, you've all got my number, hey? I'll put it on. Thanks, Chris. Let's put it on. Again, if you've got a funded account, please not on demos. Put my number in. This is for trading advice, assistance, that sort of thing. I think it's overcooked. I see downside. I agree. Roger, trading support. 061. Probably easiest to do a quick WhatsApp. Just remember, a funded account, not a demo. And if you've got a decent amount of funds in there, I'll up you to my WhatsApp group. And yeah, just because I said, I'm licensed to advise you. The other guys aren't, so it's important. If you want trading advice, yeah, come straight through, and I'll help when I can. But I tend to, you see, overcooked as in a bit high. You see some more downside. I talk about overcooked is the NZD against Canada. I think is overcooked. I do see downside, but my problem is, unless you mean the other way around, it's getting a decent one there. And remember, this is now broken through that. That was resistance going short. It broke through. It's coming back to test it. So that was that line resistance. It's now support. If you think it's overcooked, in other words, you think it's oversold, and the Canadian's overcooked and it's undercooked, got to make sure we're all on the same page here. You might want to sell at a better price, but it's going to have something fundamental happen in New Zealand and Canada to change it back up there again, which could happen. But in the meantime, the information we have at hand, rather sell the rally. Oversold on that basis, because remember, that's the base currency. You must look at the secondary currency when you buy or sell the base. Good. Yeah, it could be, but then again, let's go back to the yen. Let's do the CHF good one. Yeah, CHF JPY. See what I mean? I think it was a bit overbought there. I think it was a bit overbought there. I think it was a bit overbought there. Look at this to this. Would you be buying there? Just well, you didn't, by the way. ABC, yeah. You've been overcooked there. It came off a bit, maybe a lot. I don't know, to be pips there. But you get my point. What I'm trying to say is, now, is this overcooked here? And it goes up to 163. Again, I think this is highly overcooked, but I'm pretty nervous to sell it. I need a bit more confirmation. Having said that, it might work out. And how much did it come off here? 300 pips, would be happy with that. So you might get it, but no confirmation. And again, look at the candle, guys, maybe a bit clearer for you. Zooming in there. Bit of decision today, indecision yesterday, and the sellers came in the day before. So we haven't got a confirmation to break down, but not confident enough to buy at these levels. Same sort of principle going back to the NZD, CAD you mentioned there, Mike. I don't see, I'm confident enough to go and buy it up, but I'm not confident with such a tight target to sell it. So I'm sitting a bit on the fence on that one. That's my thinking anyway. Has all got that? Okay, it's very important you interact if you're not sure of something. It's no good not understanding it and then jumping in and it comes back and bites. So anything you want a little bit more clarity or something like that, or you want to know what a moving average is, don't forget, while I'm talking it, save your charts. Don't forget. Right click, templates, save the template. If you lose your charts, you don't know how to fix it, you're going to get very, very frustrated. And then you put in your name there and save it. Okay. If you do, however, want to change it, right click, go to properties, and you can change the stuff there, change color, background, you name it, it's all there. It gives you an example there. If you like the example, okay it, and away you go. So if you do lose the charts or whatever and it's saved, all you do is go to templates and hey presto, there they are. Okay, good stuff. Right. Oh, yeah. Going into the weekend, I hope you have a good one. We've still got 40 minutes, don't worry. I'm just saying, but be a little bit circumspect getting into clever with the dollar coming up as two and going the weekend. I have a saying called squaring the books. I don't suggest you do, no, but a lot of institutions will square the books by sometimes highly volatile ones, not shares, but I mean highly volatile, like maybe a index or whatever. Just cut or close some positions going the weekend. But having said that, there could be some movement, but it might be quite unusual going into the 2:30 release. I'm not sure we should be doing a straddle trade on it, but there will be some movement, almost certainly, depending on the information coming out. But if you want to do a straddle trade, I'm not sure I'll be doing one myself, to be honest. I'm thinking maybe the GBP, look at that one. Let's look at a shorter term one. That one you can look at. The euro, maybe the euro dollar, because 11 o'clock, the information come out in the euro and you need to make your decision accordingly. If the information is very strong on the euro, maybe leave it. That's one. I'll tell you one you could look at is the NZD USD, because that's weakish against the dollar. So that might be one to look at. I've got on the 1 hour, sorry, put on the 15 minutes something. You usually put on the 15 minutes you're doing it. That might be one to look at if you want to do it. But bear in mind, although it's extremely important, emotionally it's not as important as the CPI. So it might not have quite the effect. And don't forget, you could get a bit of an up and down bounce. You don't want to get taken in on the long and the short, a bit of a whipsaw effect, if you see what I mean. Yeah, I'd suggest after that enormous amount of waffle, make my mind up, that probably your best bet if you want to do it. Okay, now, does everyone know how to put a stop loss in? I'll give an example what I mean. Let's say, doesn't matter what, we'll use this as an example. The thing is really moving, you want to take advantage of it. So you go and obviously you double click there and you get new order. You've worked out your volume. Clearly, you're not going to go in without working out your volume, obviously. And the thing's moving. You don't want to faff around putting SL and TP in. You want to click the buy and sell. Now you're in the market. Then you can go to your stop loss and TP there. Okay, it might get stopped out here, but we'll see. Stop loss and TP there. So I'm sticking with the US dollar trades going up and down. Earlier on this morning, in a profit. So don't panic. You got your protection in the correct volumes. Okay. Right, go to there and then you can double click and put your stop loss in and TP in after you've entered. You can obviously modify. So if you don't have a modify, you shouldn't be trading. You should go on a platform trading. This is a vital part of trading. Is cutting your position, modifying your position, and getting those volumes right. Can't do that, you shouldn't be trading. Now on the gold, I think we'll stick to the one we've got. Where is the gold now? Yeah, we'll stick to the one we've got and I'll put it there for you. 1890 is clearly SL. Just say, put it down properly, give me a moment. And TP. Make it 1860 is the original one. Make it 1950. Maybe it's slightly reduced TP, but don't forget, you can modify the TP. If that dollar is really weakening, the yields are coming off, and there's a lot of fear in the economy, and more talk about recession and nuclear bombs going off in Ukraine. I don't know, whatever. Why do you want to get knocked out at 50? Modify your stuff. You're in a profit anyway. If it works out, and put your stuff, maybe your TP up to 60, 70, 80, I don't know. The next resistance area by looking at the chart and go with that particular winning one. What I don't suggest you do is if you take profit after it's gone up, we use gold, it's probably easier to talk about gold. What some people do, and I don't suggest you do it, is it's going favorably, you take your profit, then you go in again at a higher price. Now your risk was up to maggots. Or it's come off a bit and you sold it short and it's come off a bit. No, it's going to bounce now. I'll go and buy it. Now you're going against the trend. So you got the signal. There's a reason for it, and stick with it. And if it, you can always add to it or whatever. But don't sort of say, I've sold short for gold for argument's sake there, taken profit here, and then go in again with another short. Or it's come off so much because the daily, strong psychological support at 1900 and strong bounce yesterday. Oh, well, I see all this. I'm going to go and sell it down. Then it goes back up again. Some people did that with the Swiss franc yesterday. On the release of the data, they had been to the trading room. They didn't know what that data released, didn't know about the economic calendar. So it's let Alfredo in. Didn't know about economic calendar. And so it was going up now, so I'll go and buy it. And it went up a little bit and then it came off. And then it went to a minus. One person particularly has been upset. He did extremely well, overexposed by mistake, but luckily it went well. I reminded her of it, took the profit, great, and then decided, because now that's okay, I'll go and do a couple of more trades, going against the signal, going against the trend, going anything, and unfortunately wouldn't put it back again. Try and control those emotions. Okay, but anyway, that's SL and TP. Hope that's all clear. Because Mark has been doing this for a while, he's the first to admit this. He ends own visits, he's far from a stupid man, he's experienced, but he's not here to back up. He knows that he's been trading for a while now. Nearly all of those mistakes are made. Once price action, market happens. So now you do about that, it's not your fault. Okay. If that something happens to gold that it's when it comes screaming down, that's not your fault. But he did admit that 90% of those things that went wrong was not market action, or, the price action was more his not indisciplined emotions, basically. So it's really, really vital one keeps an eye on that. Okay. And we've all been there, I've certainly been there. A lot of relationships gone wrong and things in one's past, more emotional than rational, that sort of thing. Okay, any questions what I've been talking about? Any questions on trades that you're in, you want to have another look at, or you want to enter, or anything like that? We can certainly discuss, and any of those questions can be a benefit to everybody. I mean, it's not on the moment, but Pietro, son asked a question. I know he knows the answer. He's helping you guys up asking it because He thinks you guys might not. Anna Marie's very good at that, so I then can explain to help. You're good with that. Okay, yeah. Again, we don't know, but I think unless some radical fundamental comes out, Nicky and company, I think the 1900s is going to hover and hold, and it's going to be fairly sideways going to 2:30. A lot of guys are a bit nervous to see what's going to happen. And if it's favourable, you'll get a nice jump. If it's not favourable, well, not favourable, what can I say? Right. The only reason why I might do WTI, that's Western Texas Intermediary, if you didn't know that. That's the American oil, basically. It's a slightly cheaper price, slightly lower quality than Brent. And the crude oil, well, I've never traded, I don't know why, but that's the Saudi oil, slightly cheaper, probably I've never traded. Okay. Well, CFDs will be affected on opening at 3:30. So information will be fed in before opening and will be fed into the price action on opening. So if it's good for the share, you can't take advantage of it because it will open up. Everyone else will know that. There's no such thing, Nicky and guys, are no-brainer. If it's fantastic for shares, well, I'm going to take advantage of my buying that specific share. No, you won't, because it'll open above. You're going to trade it accordingly on that new price. Bear that in mind. Mark's look at that. Yeah, I like that one. If we can get a decent price, absolutely. Okay, so WTI, the only reason why I might do WTI instead of Brent or vice versa is, you might find the stock out the way, if down to here to entry is maybe $3 on Brent 4, or vice versa. I'll choose that. You'd rather go with the same risk with a $3 stock than a $4 stock, obviously, because it means you can get a big position size. Hope that all makes sense. Okay, but WTI, leave it alone like Brent. Oil, I would leave it alone. If you're in it, modify your stop. If you're not in it, I wouldn't touch it now. It's very erratic because, as mentioned, the fundamental push me, pull you. Those are old enough to remember Dr. Dolittle. It was an animal made up fiction one that push me, pull you. Head in the front and the head in the back. The head saying go forward in that direction, north, and the head in the back is trying to go south and it's going nowhere. So it's erratic because it's stuff pushing it down, stuff pushing it up fundamentally, hence the narrow range, leave it alone. Okay, that's my suggestion. The other one was silver. You can if you like. You can if you like. It's very similar to gold. It's like the poor man's gold, basically. So if you know gold, why go to silver? What's the point? You can if you want, though. But if you specialize silver, do it. Specialize gold, do it. But why do both? You can if you want. There's not much point. But where's silver anyway? Where the hell is it? Down here. Lost it somewhere. There's some fiddling around my charts. Lost a couple of prices. Didn't matter. Okay. There we are. Okay, so you want to go long gold. I wouldn't be going short silver. Remember, look at the contract size. Right click. Specifications. Don't forget, contract size is 500. You all know what that means. 500 in dollars multiplied by the price. So $22 an ounce multiplied by 500 is the contract size. Just understand accordingly. In other words, 0.01 is not one size fits all. Just remember that. It's 50 rand a micro on silver and 150 rand a micro on the NZCHF, which we'll come to in a minute. Well, clearly, you're not going to do the same position size. It'll be 3 times larger in silver than you will be in the NZCHF, because the risk is 3 times higher per micro. Bit of arithmetic, common sense, okay. Okay, right. I hope that answers your question. Nicky, I hope you're good with that. NZD, come back to you if I'm not sure, please. Make sure it's clarified on that. Let's see if we can get a price, because I'm bearish on this one. You missed that very well. Happens. Market, everyone's going to miss a trade. I know who you are. Everyone's going to miss it. There's plenty more opportunities. Don't rush into another one or chase it, fear of missing out, FOMO. Wait for the next one to come around. Okay, so it's going to, I'll leave it there for the moment. So I'm going to just go in cutting positions. People don't seem to understand that, so we'll come in. Yeah, it's come up to, as you can see, a bit of resistance. It's a possibility, a bit more downside. Can we get 28 pips? We'll have to go to the weekly. No, you have to go to the monthly, get a target. No, I'm going to make a suggestion on this one, guys. Marcus, particularly because you asked the question. You missed that trade. Sorry, tough. One of those things. Short it, yes, not right now. because it's not a decent target. And to have to go to a month to find a target that's better than 30 pips, forget it. You don't want to go to aim at a target that was last there 20 years ago. It might happen, but you're working on percentage, the odds. You get it. It's just not worth the hassle. It's not worth the odds are against it. So yes, short it. We might get a bounce. Get a bounce up there, and your stop loss. Sorry, your target's down here. It's only 70 pips, but maybe get a 30, 40 pip one. If it goes back to here, and you short it, then you're looking in a 90 odd pips with a stop that's maybe 50, 60 even there, because you get a stop there. Right about here, confirm, short it. Confirmed first, don't put a stop pending order, don't put a sell limit, leave it alone. If it gets there, remind me, discuss it, with potential to come back down again once we've got a confirmation. But leave it for now. Okay, for those reasons. I hope that was clear. Okay with that, Mr. Pitman, Pitfall Man? You got that? As clear as Frank's. Okay, good stuff, great. I'm just going to do this quickly because I'm pretty sure some guys are a bit nervous to ask, not quite sure. You don't have to close your entire position unless you've got 1 micro. A little tip here, I know it's difficult, but I've done it myself. To avoid fat finger, before you press the sell or buy button, just make sure that you're on the right instrument, might be the wrong instrument. You're on the NZD CHF, you might want to be the NZD CAD. It's bang next door to each other. You might be on the wrong one. I've done that before. Also, just check your volume and your volumes are correct, the stop loss TP is correct before you press the button. As I say, there was a person yesterday who's highly leveraged, had the account, because it's so highly leveraged, went in with a position size far too big because she hadn't got the decimal point in the right place. Just make sure, if you want to go with a micro, make sure it is a micro. Mini, make sure standard. You get the idea. Just check your volumes are correct. You've got 0.0 to 0.1 or whatever. Okay, so now you've checked it, you're in, and it's doing well. It's doing well. We'll use this one here. It's doing well. Okay, I'm holding on to that. See my stop, I might get stopped out. It is better than this one, so I will make a profit, whatever happens. But if I get stopped, if I decide it continues now and I'm nervous, it's getting to here, I am nervous, right? I don't know, where's my TP? 54. Oh, it's giving me a brain surge of stuff here. I'm getting a bit nervous. It's a bit below here, so not sure it's going to reach there. I'm getting a bit nervous, right? What you can do, you can modify, of course you can. But if it comes to this level here, you're getting a bit worried it might bounce, but I'm still making money. What I might do then is go here, double click on this one and close some of my trade. I've got 10 micros. 10 micros, 1 mini. Remember, 1 micro, 1 stand lot is 100 micros or 10 minis. So I'm going to think close 5 because it's down here now, for example. I put in 0.05 and then I click on the close button there. And what will happen, 0.05 will appear there and whatever that is will be halved, obviously, right? And I'm still let the trade run, but I've modified my stop to here. So get stopped out, I'll still make money, but I want to be on board just in case it breaks through. And we all got that. Anyone hasn't? We do it again. You need to know you don't have to close the entire lot. If you make a mistake and you've got a decent amount of money and you bought 2 micros and you meant to buy, I don't know, 20 micros, you don't have to close the 2 micros, you let it run. You just go and open a new order for 18 micros. 18 and 2 is 20. I did that to one a couple of times, once several times, and say, no, this time they're underexposed the account. They made a mistake and they only went in with 2. And I said 10 would be better. So they closed the 2 and opened up a 10. Why would you do that? Surely you know if 10 is the right amount, you've already got 2, you increase it by 8. 8 and 2 is 10. Right, Nikki, I'm glad you asked that question. You can, you can open another order. If you want to increase volumes, not decrease, increase volumes, you have to open a new trade. And there might be a situation, it might be worth your while. What do I mean by that? Right? It's broken. You want to go long on this one, Vicky and company, go back in time. I'm trying to use an example. This is looking good. The NZD, fantastic news come in. It's looking great. There's some problems in Switzerland for whatever reason. And clearly, it's now in the buy zone, pretend to use this example to get the concept. And you want to buy it, but you think, hang on a minute, I want to get a better price. I want to buy it here, but you're worried it might not come back to get on board. So you do your risk analysis. You say, right, I can afford, because I've got a nice account of 30, 40,000 Rand, I can afford 1,000 Rand risk. I'm happy with that. What you can do is you go in 500 Rand there with your stop loss TP as per normal. And if it doesn't come back, you're on board. Or it does come back to your entry here and you've got a buy limit of the other 500 risk. So let's say it works out, for instance, that 1,000 Rand risk, let's say is 10 micros, 1 minute, 10 micros. You go in 5 micros here and a buy limit of 5 micros there. If it comes back, takes you in, you're on board the entire amount. If it doesn't come back, at least you're on board with half the amount. So that's why you might actually increase volume by opening your order. I'm talking about decreasing volumes. You've already up, as I say, I know 100 pips. You've modified your stop to maybe 20 pips behind that. So if you get stopped out, you're going to make 80 pips. But you can see there's quite a bit of resistance there. Your target's, let's say, 150 pips away. So it might make target, and it is doing well. So you might say, yeah, but it's a bit worrying. It's quite a strong resistance. I'll leave my stop loss 20 pips behind market, and I've got 10 micros. I think I might bank 5 at that price. And if it breaks through, I'll benefit being half on board. If it doesn't break through, I'm stopped out. Well, at least I got a 5 at that price, and the other 5 that stopped out 20 pips below that. Is that complicated? Does that make sense? Okay, so only decrease volume, you modified new. That's correct. Well, yeah, that's right. That's an order. I'm in now, where we're NZDCHF. Yeah, we're on that one now. I'm in that one. I can't say, oh, this is doing so well. I'm going to quickly go back, change that to 2. Now I'm up 2 grand. That don't work clearly, obviously. So I can cut the volume, bank some of it. If I still think, hang on a minute, this is brilliant. You know what I mean? And not because I just made 20 grand by some lucky traders overexposed on 5 minutes ago and the fundamental worked my way. That's purely emotion. That's nonsense. Okay. I'm just saying, right, hang on a minute. This is really strong. I'm not going to break up my disciplined percentage risk. I'm going to stick with that, even though I may be able to afford more, but I'm going to stick with that discipline and say, yeah, I think I might add to it. I'll take out a new order and maybe buy another 4 or 5 micros to add to it or whatever. Does that make sense? Well, Nicky's quite confident. It's a good point. Nicky, you're quite confident. If you want to unmute with pleasure. A lot of people don't, simply because they haven't got confidence or whatever. Those who do, it's a lot easier. Quite right, Chris. Well, well,
I think it would be easier to just ask, I just, so that's down. And then I just wanted to ask, so when you decrease your volume, is that kind of like, if you can see the trades going against you, is by decreasing volume a way to kind of like protect you, or like just in case it goes down, you only lose like half of the amount?
Yo. So glad, Chris, you're a star. I'm glad you said Nicky unmute. Question. What a pleasure you asked that. No, I do not. What do I mean by that? You've got your strategy. My strategy is the stop loss there, right? It's now 83. Hang on a minute. I don't want to get stopped out there. I'm going to go and close half it. No, stick with your strategy. Now, here's a better example. This one here. Clearly, it's going against me at the moment. Oh, I don't like that. I don't like seeing red. That's all emotional. I've got how much? I've got 1. That's small for my account, but I'd already been stopped out in the profit, so I couldn't afford 2, to be honest, probably a little bit more. I decided not to get too cute with the dollar, but I went in again with 1. So I'm a little bit smaller exposed, but I'm happy with that. Okay. Now, it's going against, it's 5 rand against. I'm not going to go and close half of it because I'm sticking with the strategy of the stop loss there. I'm only saying, not that. I sometimes cut this one, but very, very, very rarely as a loser. I stick with the strategy till I hope it becomes a winner. I'm stopped out. Hope that's clear. I'm talking about a profitable one. I've sold short there. I've sold short here, and it's come down, and I was out or doing something, or I missed it. I don't know, whatever. It's bounced a bit. Right, but let's say it came down here, and I was in front of my computer. I looked here and looked here. It might not go further. My TP is down there. Then I might say we could get a bounce here. I've got 10 micros clearly on this one. I'll bank 5 and put the stop loss here. So I banked 5 at that price and stopped out in the profit in that price. Are you with me? But I didn't want to bank the whole lot in case it broke through. At least I'm on board with half my position and the half I was banked. And if it didn't happen, I've modified the stop from up here back to down there. Does that make sense, Nikki?
Oh, okay.
Okay, politely, Nikki. Do you really mean it? Because it's important for your sake. Don't mind being polite. I know you're a lady, etc. But if you've got to get this concept, not just Nikki, everybody. Have you got the concept I'm talking about? Because these little tricks to trade will help you, I promise you. Okay. Do you really understand?
So I get so what I understand from that is you were saying that only if you're in a profit or if you're making money, then you would decrease your volume just in case like it bounces back, so you can at least get half of it instead of none of it.
Yeah, but for the reasons why. I don't say, oh God, because I feel like it. I'm not used to being up 500 Rand because of my account. I'm panicking a bit because I'm not used to that. I'm going to cut that because I so love being up 500 Rand. What you're doing is you're cutting your winner. You've got to understand the psychological concept. But hold on with your 500 down. You don't want to cut that, do you? You want to hold your loser. Hope it's going to come right. So it's got to be understood the concept behind it. That's why I gave you that strategic pattern. It's got to be a strategic pattern and just some emotional staring at it because you're panicking, seeing a red, or you're panicking it's too profitable. Now you're worried it might be taken away from you. It's a major difference in that concept. Do you understand what I'm saying?
Okay, let me marinate on it and I'll get back to you.
Okay, marinate it and get back, Nikki. This is important because I'm pretty sure some of those questions there are going through the heads of a lot of people. They didn't know how to, they haven't got the basically articulability you have to verbalize it correctly so we all understood. We're very clear. So people like you speak is very helpful because then we can clear up, we're all on the same page and get the concept and it'll make life a lot easier. Fantastic. Right, going on from that back to Chris. Did you understand what I was on about there? Because this is vital. There's no good getting the idea and misunderstanding it and acting on it and it backfires and say, but Roger told me that. We can't be alike. But the point is, I didn't say that, I said something else. You misconstrued it. Do you understand what I'm talking about there?
Yeah, I understand perfectly, Roger. It's basically if you have one full mini in the trade and you want to close half your position, either in profit or a loss, either you will then, instead of losing the full lot, you will only either lose half or you close half the profitable lot and bank half of it.
That's correct.
Instead of waiting for the trade to completely TP or completely stop loss, you can just bank a little bit or reduce your loss halfway.
100%. In other words, you get a signal, sell there, target here. Once you're in that trade, what happens to price action is completely outside your hands. You've got to accept that. And the situation might not arise when it gets there. Let's say this line here, it's in the correct place. But that doesn't matter. Let's pretend it is. You're getting a bit nervous here. It's got to be a strategic reason behind it. You don't say, oh, I'm up 1,000 Rand. I'm going to bank off of that. So bloody hell. That doesn't make sense. That's just emotional. What you want to be doing is if it comes down there, if you see look at this, the candle's flying through it. Why would you do that? If it comes down there and you start seeing some buyers, maybe not on the daily, maybe you're on a 15-minute or an hourly, I don't know. It's coming down. You're seeing a bit of a bounce on that area there. It might push through, but also close the entire one. The target is down there or whatever. You close half of it, and if it bounce fizzles out, it's still pretty strong to the downside. At least you're still on board. You've modified just in case, or you keep your modified in profit or whatever. Not too close, guys, and then it's still on board. That's the idea. not just look empty-headedly at the figure. Oh, I'm up 2 grand. I'm used to be up a grand. I might be taking, well, I'll go and close it. No, modify, cut for reasons, strategic reasons, technical reasons, or like I did yesterday, the Swiss franc. I wasn't much up. I was in a bit of a profit. I was only about 20 pips in profit. Why would I put my stops so close? Because I knew at 2:30, 2 major fundamentals were coming out. So I'd rather be stopped out in a 20 pip, I think it's a 20 pip profit than squat. So I can put my stop loss much closer to normal because there's a strategic reason behind it. And that's what I'm trying to get. And as you learn more and you question like Nikki did, etc., you'll get the hang of that instead of just because it's an emotional feeling at the time. And that's what the winners in this business rely on. The retail trade acting emotionally, so the retail trade give the more experienced guys the money. And it's a zero-sum game. The losers pay the winners. And they like this non-understanding. They like that ignorance amongst people, purely on emotional, because they end up paying them. They're the guys that pay the rational, if you see what I mean. That's why it's important to get the concept. Now, if you're in a profit and you want to add volume, there's nothing wrong with that. People always say, when it comes off, I'll buy some more, and rand cost averaging. Some might work, some it doesn't. But everyone forgets if you're in a profit, you might buy some more. As long you don't want to be buying some more here. If you're, let's say, going long, you don't want to be buying some more here because you've got this obstacle against you. But if this wasn't here, let's take it out of the equation. If that's not there, and it's clearly strong to go up there, yeah, no problem buying some more. Now, there's no problem adding to your trade in the winner, no problem in cutting your trade, none problem with any of that, long as based on some strategic knowledge, not as a thumbs up because you're in that sort of emotional mood in the moment. That's what I'm trying to differentiate. Does that make sense, Martin and guys? Because that's overwhelming, not just incorrect position size, it's the strategy, it's just particular homespun emotion. It might win at first few months, few weeks, whatever, come back and bite. Good. Just because you made 30% in one day, 1 week, don't start thinking I'm going to make 10,000% a year. You're extrapolating. No, you're overexposed or you got lucky. You might have the correct position size. It might be correct. Why did it suddenly make that phenomenal profit? You forgot to put a TP in by mistake, whatever, and it shoots up there. And you made 30% like one particular lady did yesterday, grossly overexposed, and the fundamental worked in her favor. Sheer luck, she didn't have a TP or whatever. But that is not going to continue. I put my house yesterday, my entire wealth, everything yesterday on red in the casino. I made 100% gain the turn of the wheel. So let's all go to the casino and do that today. No. Why not? Because if black came up, then I would have lost the whole lot. So you've got to bear that in mind. Okay. And thank you, Chris, saying if you're not sure, verbalize it. Makes it a lot easier. Because we're going to and fro on the chat line. Sometimes on WhatsApp as well. I mean, someone goes on live chat and wants an explanation. I have to sometimes phone them because they're not getting it on the live chat because it's limiting tapping it out. You know, that's very important. Then you get the ambiguities. You can see what we're trying to get the concept on. I hope that's been of value anyway. If not, do what Nikki just said, marinate on it. Marinate on it, write it down, get professional, bring a piece of paper. Not quite sure I've got the concept. Let's discuss it again. And then Chris might come in and say, yeah, but you might help in, or I don't know, Edward or Wani or Martin. It doesn't really matter. Mike might come in, but don't you mean that? Oh shit, I see what you mean. Yeah, no, I forgot to explain that. You know, we work it together. But once you got the concept, the rest is easy. It's number crunching. But the problem is most people are not getting the concept, and that's why they get frustrated and complaining and getting upset. That's correct, yes. That's correct, Chris. I'll be good with that. Starting to fall into place a little bit, guys. Martin, fall into place with you. Nikki, please come back to me and then go over again. There's still a couple of questions. That's invaluable. And beyond, not just for me or you, but for everybody. Okay. Okay, good. As I say, the major problem we have, I think probably all brokers around the world, tiny percentage of the buy courses even look at the course and even come to classes and even, you know, attend any of them when they're laid on free part of the service. And I think the reason, again, psychological. Too many people are coming into a business wanting the money out of it, like they want to go to A to Z. It's not interested in the vehicle to get them from A to Z. The clients are interested. They're going in because they want the end result. Fortunately, you've got to know your product and have an interest. If you have an interest in the product, then it makes it easier. Why do you want to be a surgeon? Oh, I've heard surgeons make a lot of money. That won't sustain you to get the exams, time and effort put in to be a surgeon, to get that money. If you see, you've got to have an interest in the vehicle getting you there. I'm very, very good at, I don't know, table tennis, but I'm not going to take it up. I'm going to take up football. There's more money in it. Well, I'm going to not be very good at football because my interest in table tennis. So I'm not going to put the hard yards in, if you get my point. And I think overwhelmingly, most people are getting into this because they've got a financial problem or they want to make a quick buck and with a minimum amount of effort and a maximum amount of gain. And unfortunately, it doesn't always work that way. I don't want to be a dream spoiler. I want you to achieve your dreams by getting a little bit realistic understanding of what I'm on about psychologically. Okay. I know it might be blindly obvious to some, but clearly it's not. And it's not because they're stupid, far from it. It means that their mind is tangled up with what I call the one principle, and no percentage is given to the give principle to achieve the one principle. It's all focused on the one, so that means I've got a bit of give to go in to balance the equation. Hopefully you've got that concept, because overwhelmingly worldwide, not just here, it seems to be why things come back and bite, people get upset. Okay, are we all good with that? Because this is vital. We got our trades out. It's going to Friday. Might be a bit quiet. I'm not sure we'll get one out on Friday. Sometimes we do, some we don't. But there's a bit. So we've got a few out. We don't want to overtrade, get ourselves too much involved. But in those quieter times, I want to harp on this because then we can clean up mistakes that we can clean up. I can't control the price action. The other stuff we can control, and it's a pity to lose out on something we can control. And when people like Mark, who's not here, admit he's made a few losses and it's his own fault because of those reasons, and honest with oneself. Say, lie to me if you like, but try not to lie to yourself. And it's quite common. It's called cognitive dissonance. I mentioned it before. That's the fancy phrase for major denial. Okay, any questions and all that? Has it been of any benefit? I hope it hasn't. If it hasn't, well, do Nicky and mull on it or marinate on it like that. And then jot a couple of things down until it's ironed out. It'll save you a lot of time and hassle. You speed up your direction to target. Any questions on that, guys? Are you with me on getting this, Chris? Instead of burying your head in a book, trying some more details and half a dozen books, get the sort of concept behind. I've been finding it quite a lot easier, a hell of a lot easier, in fact.
Yeah, Roger, I like these trading classes because some days when it's quiet on trading, the more you, excuse my language, waffle, the more we learn technical terms and ways to advance ourselves. So it's great. I like it.
Thanks very much, because when I say waffle, I'm trying, hopefully it's not waffle.
I meant that respectfully, yeah, but we learned a lot of your lingo.
Yeah, exactly. Yeah, totally. I mean, part of my sort of sense of culture has been quite what we call self-deprecating, take the mickey out of myself, which is part of the culture I own. But yeah, but the point is getting the concept.
Yeah.
Because if we don't, we're driving the wrong road, and we're picking up more books and more studying. But you're on the way to Limpopo when you actually want to go to Durban. It's no good studying more books. You've got to say, hang on, maybe turn around, go in that direction or whatever. But yeah, I use analogies a lot, try and make it familiar, like the car or the house or the partner, to make them more familiar. You find the same psychology areas apply in trading, whatever business you're in.
Yeah, I've learned more in trading room in 1 month than I have in all the books.
Thank you, thank you. I'm pretty sure the way he's saying he's not just being polite. In fact, no, he's not.
No,
Get what
that's the
he's saying.
truth.
He's trying to get it across for people to get these concepts across. Because otherwise, as I say, they're getting more and more frustrated, and they're buying more and more books, costing more and more money, and they're missing those simple little tweaks. If anyone plays golf, keep the left arm straight. It's unnatural, it's difficult, but until you get the concept, keep the left arm straight on the backswing, you can continue going to shank the ball. And that little tweak like that can make such a difference. Same sort of principle. And as you say, Chris, remember, we're all in the same boat, ladies and gents. Absolutely. We're all trying to do it and we'll get there. I hope that's been of value. I just hope more people attend, because there's not that many people attend. And that's another reason why we're not doing the afternoon anymore, because there's not enough people attending. But there are enough people complaining it goes wrong, but they're not understanding. Okay.
Roger, I have a question. So I'm thinking about it now, and I'm still confused on how, okay, so what counts as a strategic, like what counts as a strategic move in order to know when to do this tweak and halve your volume?
Just go to a better example here.
Like, how do you, like, what triggers it to know, okay, I must go and like halve it?
Yeah, I hear you. I'm just trying to put up the NAS now to make it easier to explain on there. I just think somebody just joined now, probably coming halfway what the hell we're on about, a bit late now anyway. Right, okay, let's go back in time. You bought, let's say, here, see this resistance here, right? You don't want to buy there because it might not break above. You buy there, and look, you'd probably, if you stopped down there, you lost out. You see, look at that resistance. Can you see it clearly with the crosshair? Yep. Then it breaks above. You might need a confirmation candle to break above, and it's broken above. See, put a line and make it much easier. Spend some time there. I know it goes later. If you've got to go, but this is important. Right, here it is. Right, it's gone. You're not buying there. That's why you have a buy stop. Why would you have a buy stop? No matter the straddle trade, why would you have a buy stop at a worse price? Sometimes it's a daft thing to do. That's lack of knowledge. But sometimes it's a strategic thing to do because you're waiting. This is the roof. Let's put the floor. We're in a hotel. I usually quite like this to make it more familiar. There we are. We don't know that. I have to go back in time to see if there's another high there. Let's pretend we've got a high up here as well. Just going to pretend to get the concept. Right. You're now on the 4th floor of the hotel. That's the 5th floor. You with me? Mm-hmm. You don't know if you're going to break into the 5th floor. If you bought there, you wouldn't have done yourself a favor because it came back to the floor of the 4th floor. You're with me? Okay. Right, you got it so far. And that's what we call range trade. You're waiting for the breakout. Aha. You've got the breakout here. See the confirmation of that candle there? So that's when you buy, because it's now in the 5th floor. You put your stop down here in the 4th floor. You got it?
Yep.
Now, you can see this previous high, which doesn't exist, but let's pretend it does over here. And there's 2 or 3, not just one, but there's 2 or 3 quite strong ones here at this level here. So therefore, as it gets there, you'll be thinking, aha, no, I had a better one here. Let's say it gets to this little level here. Now, I'll stick the same one. Let's say it gets this level here. You're not sure it's going to break above there or not, because this is the ceiling of the 5th floor. So what you do there is, in case it breaks above, because this resistance, I've changed my mind, there's only 2 candles, not 5 or 6. There's 5 or 6, very strong, so I like the breakthrough. It's a particularly thick concrete floor. This one is just a bit of timber. It's just a bit of plywood ceiling. It might break through. You get the idea. So what you do is it's gone up here. You have an amazing profit. You might not too close, modify your stop to, let's say, this level here. And you've got, let's say, 10 micros. You would close 5 micros. Well, if you had a TP, they'd be hitting your TP out anyway. You'd modify your TP out of the way, and let's say there. It's gone up there, you close 5 micros and you get your stop here for the other 5 micros. So if it breaks through to the 6th floor, you're on board, but in case it doesn't, at least you banked half your position at the height of the top of the 5th floor. And if it breaks back, only maybe a couple of meters below the seam of the fifth floor is the rest of your position is closed. Are you with me now?
Okay, so going back, so when you say like when you break it on the fifth floor, so when you say like, how do you close like only half? Will it only close when you modify the volume to like half it?
Show you again. Right, you bought 10 micros at this level here when you got the confirmation. Your stop is down here, came back, tested the support and bounced. Ideal technical buy there, okay? So it bounced. So you're still in. All right, now you're down 20, 30 pips. Doesn't matter, you're still in. You've got your stop there and it shoots up there. You're still on board. Forget what's happening over there. You're still on board. You don't know that's going to happen. Okay, still on board. Now this is the sixth floor here. Let's put the sixth floor in. Hope you should actually stick around because I think if you get this, it'll make your life a lot easier. That's the sixth floor, all right? Now, you've gone in here, you're in the fifth floor. Now, you've seen previous history over here. There's only 2 candles. It's not very strong resistance. So it could break through. So what you do is you've got 10 micros. At this level here, you put your TP modify up here somewhere. It doesn't really matter. Out the bloody way, basically. Out there. Then you've modified your stop, which was down here, say, up to this level here. We'll put it purposely to that level there, okay? So you got your stop in here. I hope all these black lines, you understand what they're on about here.
Yeah, right,
Okay.
so that's the new stop loss.
You got it. That's your new stop loss. I purposely put it there because you get stopped out, by the way. Now, you got 10 micros. You've closed 5 at that high price. You banked them, okay? You still got 5 running. But if it pulls back and you're stopped out, you're not stopped out here, you're stopped out there. And that is your profit on the other 5 remaining micros. Right, so let's go back to the 4. Yeah, here we go. No, didn't show up. I'll stick to there. Sure. So what happened? It didn't break through the 6th floor. It came back and stayed in the 5th floor and it hit your stop loss. So you banked, and let's say you made 100 pips on this guy here, and he came back and stopped you out, and you made 80 pips on the other half. So you made 100 pips profit on half your position and 80 pips profit on the one you stopped out. Do you get it? Does that make sense? You got it now. You wouldn't have modified this. You'd have modified. Let's say the position is here, and clearly the ceiling is there. You're 3/4 of the way up, but it might not get to the ceiling. It might come back. So you've modified your stop, yeah, but you still got your entire position size. Why would you close any of it? Because you're still in a nice profit. You got in here, your stop loss was there, you've modified it to here. So it comes back and stops you out 3/4 of the way to the ceiling. You still made 40, 50 pips. So what? You made a profit. Why would you close half then? Leave the entire one running. You're in profit anyway, the entire full amount. Why would you close any of it? Doesn't matter, right? Only when you get to the strategic, well, I'm saying maybe the wrong word, ceiling. The ceiling is when you might close half, you might close a lot, but you might say if it breaks through this little ceiling here, it's a glass ceiling, it's a plywood ceiling, might break through, it's still strong with the NAS, it's still strong with the instrument you're in, don't want to close in time, I'll bank half, and I'm still on board for the rest one. Now it goes up, you've still got 5 micros left, and it might go through to the 7th floor. You close maybe 3, you can't close 2.5, maybe 2 or 3. Let's close 3. You've still got 2 micros left, and your stop is up here now. Again, you're stopped out, now you're completely outside the trade. That is how you run your winners. Not emotion getting out, holding on to, because you're so emotional, you don't know what's going on, you haven't read any books, you haven't gone to anything. The sales guy said you can make 1,000% a week, whatever, blah, 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 without having any clue what you're doing or whatever. That's the problem with the majority. That is a strategic way. Maximize running with your winners and then saying, if I get stopped out, originally it got stopped out there, so be it. I got my volumes right. I know I'm going to take losses. This is a loss, move on to the next one. Does that make sense? Not, oh, I got in there, it's coming back. I'm moving, I can't get stopped moving it down, then completely take the stop loss out. That's what happened to a hell of a lot of guys with good money, decent money, trading on that aspect until they're completely wiped out. That's not our fault, not the brokers, not the trading, not the class fault, not the signals fault. It's purely their emotion, not accepting they could be wrong. You're a lady, Nikki. Unfortunately, we're all like that, but men have particularly got egos. All women probably giggle at that. Men's egos can get in the way, and the ego help them on saying it's going to. Let's take a weekly one. The NAS has been flying up, flying up. I'm going to continue buying it, and I got the stop there. It was coming off. I'm going to move it. Now I'm going to take the stop out completely. Then it comes down here, and they're either wiped out or margin called, or they add to it. They keep adding to it because it's got to go up because I say so in my head until they're entirely wiped out. That is not the way to do it. It's not my fault. It's just pure emotion, not accept the fact you are wrong. You get the idea. Are we on the same page? This is very important. Those who hold on are going to learn stuff. This is vital. That's how you strategically get a plan of action to trade. When was the last time you got on a bus or a train and the ticket collector asked where you're going? And your answer was, I haven't the slightest idea. I just want to get on the train. And it's going to look at you rather strangely. That's how 90% of people trade. No idea where I'm going, no treaty or whatever. It looks a bit of green up there. I want to make a buck. That's their strategy, and wonder why. You get the idea.
So, okay, so like, for example, let's say if you have a small volume of like 0.0 whatever 4, and
call it 4. Never mind 0.0. Call it 4 micros. Makes the verbal easier. You've got 4 micros. Yeah. Okay,
so you have 4 micros. Then you strategically see that it's stopping at the 5th floor and it's struggling to get to the 6th floor. So now, cool. So now it's struggling to get to break out. Then, as I understand it, you would go and right click, modify 0.05. Then when you close.
No. Oh, yeah. No. You've gone up here to the floor here. You've got 4 micros. What you do if your stop is down here, you double click on your stop loss, you modify it to, let's say, 20 pips below the market price, which is at the ceiling. Now it's modified, okay? Now you've got 4 micros. Then what you do is you go to volumes, and there you go in there and you put in 0.02, so you got 4, remember? And then you close that. So now you got your stop loss 20 pips below the ceiling, but you've got half the position size left, and the other half is banked. Now, if it goes through, you're on board only 2. We didn't know that. So you worked with the information you had, and you worked with a proper rational area of probability. So then now it comes back and stops you out. Well, no matter, because you made, let's say it's up 100 pips for argument's sake. On 2 micros, you made 100 pips, and the other 2 micros, which were stopped out, you made 80 pips. So you made an average of 90 pips altogether. Does that make sense?
Yes. Okay. That the practical part was what I was getting also confused on. So the modifying and the closing parts.
Yeah. The only reason I'm going to modify is you're not closing half. You got in here with your stop loss here, right? And it's right up there at the ceiling. You don't close 2 and leave your stop there. You modify your stop to protect if it does come back. The only reason why I didn't close a sodding lot of them is because it might break through and you want to be on board. If it doesn't break back, you've made 101 and 80 pips on the other one. The air is so much on your side. The risk is minimal on your side. The upside potential is huge. So that by doing that way, you're maximizing upside 100 pips and your downside is minimal. You get the idea. That's the way to be looking at it. You're acting basically areas of probability. I don't know if you watch Dragon's Den, where the dragons are multimillionaires, invest in companies to help them, and they work out the areas of probability and risk in case that investment goes wrong. If it goes right, they don't care, they'll make a lot of money, but their initial reactions, how to look after my equity management, I look at the downside, control that, and then the upside will take care of itself.
Got you. All right. Thank you, Roger.
Are you perfectly clear, Nick? If you're not, come to another trading room. Ask people, because your confidence, and I'm not blowing wind up you, I'm be honest with you, extremely articulate and clear, so people can clearly understand you. So it'd be helpful if you come up with a few of them like that, it'll help everybody. Okay, But it's so important other people get not there, go onto Facebook and too shy to say, I have a clue what you're on about, and go back and do the same thing again and come short and say trading's no bloody good. I'm going to be harshly honest, it's you're no good, not the trading, because they haven't made a time trouble to put into it. It's not the course in medicine is useless, it's the person who didn't go to lesson, couldn't be bothered, and then fails the exam, and then complains to the government's fault, because it's all the government's fault, and the teacher's fault, and everyone else's fault. They won't take the fact that they didn't put in the hard yards themselves. Okay. Hope that's not too harsh, but I'm sure you will be on that. Good. Okay, we've run over time, but I'm happy with that as long as everyone benefits. Okay, Martin, I hope you benefited. Well, I must saw the name there because I've spoken to him. Okay, John, you came a little bit late there, so you probably think what they're on about, but we'll go through stuff again. Remember, if you missed it, have another one. Okay, cheers, Chris. Repetition, exactly. Thank you very much, Martin. Muscle memory. Brilliant. Okay, guys, I hope it's been a benefit. I hope you haven't been bored stiff or irritated or upset, but I'm telling you from past experience, it works better than the normal strategic stuff. Okay. Thank you very much, guys. Okay, catch you next week. You'll get it right, John. Don't worry. It came a bit late. It doesn't matter. It came in halfway.